What is the stock market? The stock market. It's one of the most talked about yet often misunderstood systems in the world. But what exactly is it? How does it work? And, most importantly, how can you make money from it? By the end of this video, you'll have a clear understanding of these questions and some key tips to get started as a beginner. Let's start with the basics. The stock market is a marketplace where shares of publicly traded companies are bought and sold. Think of it like a giant store, but instead of goods like clothes or electronics, this store sells ownership stakes in companies. These ownership stakes are called stocks, or shares. When you own a stock, you own a piece of that company. If the company does well, the value of your ownership stake can increase, making you money. But if the company struggles, the value of your stock may drop. In short, the stock market is where people invest their money in companies, hoping those companies will grow and, in turn, increase the value of their investment. The stock market operates on the principle of supply and demand. Here's how it works. 1. A company goes public. To raise money for growth, a company may offer shares to the public through a process called an initial public offering, or IPO. Once the shares are issued, they can be traded on a stock exchange like the New York Stock Exchange or NASDAQ. 2. Buyers and sellers meet. Investors, both individuals and large institutions, buy and sell these shares. Exchanges act like a matchmaking service, connecting buyers with sellers. 3. Prices fluctuate. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. For most of us, trading stocks happens digitally. We use brokers or trading platforms that connect us to the stock exchange, allowing us to buy and sell shares with just a few clicks. There are two main ways people make money in the stock market. Capital gains. This happens when you buy a stock at one price and sell it at a higher price. For example, if you buy a stock for $50 and sell it for $100, you've made a $50 profit. This is called capital appreciation. Dividends. Some companies share their profits with shareholders in the form of dividends. These are regular cash payments you receive for holding their stock, often on a quarterly basis. Dividends are a way to earn passive income while keeping your investment. It's important to note that the stock market isn't a guaranteed money-making machine. Prices can go down as well as up, so learning how to research and manage risk is crucial. The stock market has a long history. The first formal stock market was established in Amsterdam in 1602 by the Dutch East India Company. They issued shares to raise money for their trading voyages, allowing ordinary people to invest and share in the profits. This idea spread, and over time, stock markets were established in cities like London and New York. The New York Stock Exchange, founded in 1792, is one of the most famous stock markets today. These markets evolved into what we see now, a global network of exchanges facilitating trillions of dollars in trades every year. The stock market plays a critical role in the economy. It allows companies to raise money for expansion, innovation, and job creation. At the same time, it gives individuals a way to grow their wealth by investing in the success of businesses. When the stock market performs well, it often signals economic growth. But when it struggles, it can impact everything from job markets to retirement savings. If you're new to investing, here are a few tips to help you navigate the stock market. Start with education. Learn the basics of how investing works, including the risks involved. Understanding concepts like diversification and market volatility is key. Set clear goals. Are you investing for retirement, to buy a house, or for short-term gains? Your goals will influence the type of investments you choose. Don't put all your eggs in one basket. Diversify your portfolio by investing in different types of companies or assets. This reduces risk if one investment doesn't perform well. Be patient. The stock market is not a get-rich-quick scheme. Successful investing often requires patience and a long-term perspective. Use index funds. For beginners, index funds can be a great option. These funds track the performance of a group of stocks, such as the S&P 500, offering diversification with minimal effort. The stock market might seem complex, but it's one of the most powerful tools for building wealth over time. By understanding the basics, setting clear goals, and staying patient, you can start your investing journey with confidence. Don't forget to like this video, subscribe for more beginner-friendly guides, and drop any questions you have in the comments. Thanks for watching.